Hi, my name is Reed Silverne. The name of the show is Fed Pride. Reason it's called Fed Pride is because I'm a federal worker and proud of it. And I am a federal worker again. I'm working part-time, and I'm really happy about it. However, of course, I only have Friday now to put my show together. And if I'm a little bit lazy on Friday, then it doesn't have all the bells and whistles that it had for a few months there. There's a ton of things going on in the world. Among them is some, of course, the price of oil is still a gigantic crisis. There's a general economic crisis going on in the United States in general. That's used twice. And throughout the world, there's trouble in Afghanistan. Things seem to be settling down somewhat in Iraq, but there's still suicide bombings and so on and so forth. And in Bolivia, which is one of Chavez's satellites, and anybody who was listening about 4 or 5 months ago when I was talking about the new Cold War and so on and so forth, Evo Morales is the pseudo-dictator, the elected dictator of Bolivia, and he was basically his campaign was paid for by Chavez. He's the guy that nationalized the natural gas and tin industry and offended Brazil and Argentina because they had paid for the natural gas facilities which was nationalized by Evo Morales in Bolivia. Well, 5 different states or provinces of eastern Bolivia, the places that have all the natural resources, have declared their autonomy in referenda similar to the referenda that Chavez and his group were doing in their countries in order to centralize their power and take over. So that's another interesting thing going on in the world. So all kinds of interesting things are going on in the world, and meanwhile I'm going to distract myself by contacting and giving a call to Annie Mae. There we go.
Hi, Reed.
Hi, Annie Mae. I'm fine.
You fine today?
Yeah.
Well, I guess you're not on HDTV.
No, I'm not.
I heard.
Yeah.
Well, that's good.
Yeah.
You're not really ready for that.
I agree.
See that you have a wardrobe department or
no.
a makeup department.
No, I don't have a makeup department.
Maybe it's just all for the best.
Yes.
Never know.
Never know.
Anyway, I'm thinking about maybe trying to get you a little help.
Oh.
Maybe someone to take a segment. Maybe.
Oh, that's possible. Oh,
know.
That'd be great.
Or maybe someone else. I think you need a little improvement.
Yeah.
This is the new me. I get the message. Trying to be nice.
I know.
Be sweet.
Yeah.
And you've listened to a couple things. Not
Yeah.
much.
Yeah. I have a red shirt.
There's a lot that you can improve.
Uh-huh.
I'll keep on focus grouping and see if we can find little ways that you'll accept.
Right.
That will improve your show.
Good.
Make it a little more ready for prime time. You never know.
Never know.
You may have a future.
I may. Yeah.
You may not.
Oh.
So let's do lunch.
Okay.
Ta-ta.
Ta-ta.
See you next time.
Bye.
Have a good one.
Yeah, I will.
Bye.
Bye. Okay, that was Annie Mae, and she wasn't as negative as she's been lately. And I know she watches my show, so maybe I was a little bit affected by her negativity in the past. So this is the new Annie Mae. She's nice and she's sweet. So let's see if she can stay that way. I have to admit, a lot of her advice, like getting a toupee or using makeup, I haven't followed, and I haven't gotten extremely left or extremely right, and I don't really care to. So if I don't focus well among arch conservatives or arch liberals, well, so be it. You know, this is a public access TV show, and she is my media advisor, and she's very good. But I'm me, and I'm going to stay me no matter what. So that's basically it in a nutshell. Okay, now let's get to the topics of the day. First topic of the day is the oil price crisis. I have to admit, I've gone over some of my old shows, and I absolutely thought that when the CFTC was empowered, that the speculation would go down in the oil market, and eventually things would go back to normal. Now, what is normal? The CFTC got after the speculators in the ag markets that were basically causing food riots throughout the world. They forced them to report all their positions, to report their positions that were associated with the non-regulated markets as well. And sure enough, except for corn and sugar, which are basically really ethanol producing commodities now, as opposed to, so they're part of the energies really, instead of the ags, came back down a little bit. So wheat came back down, and now with the floods, they went back up a little bit, but they had a reason to. Rice came back down. Rice was a world crisis. Where it looked like countries would hoard, they would prevent exports to other countries, and there was going to be starvation over it. And now rice went down about 20% and stabilized. What's behind all these ag problems and all these commodity problems? Because both the agriculturals and the energies being crude oil, natural gas, ethanol, and so on and so forth. What's behind the big rise is now the participation of, and this is my opinion, of index funds and financial players, as opposed to buyers, sellers, shippers of the commodity itself. The futures market was basically reorganized and recreated in the 1930s, I believe 1934. There was a CEA, which is the Commodities Exchange Act, 1934. Basically what it said was you could bid on a future, you could bid it up, you could bid it down. In other words, you could take a long position on selling corn 90 days from now. You could take a short position of basically, I think that the price of corn is going to go down, and sell it short, or you could do a spread position, which is kind of jockeying between the two. And basically, it was done because I'm a farmer or a guy with a grain elevator. I have corn, and corn's at $8 a bushel. I'm afraid that it might go down to $7 a bushel. So what I do is I short it at $7 a bushel. If it goes down, I actually make some money. Vice versa, if I'm a buyer and it's $8 a bushel, I'm afraid that it's going to go up to $9 a bushel. I buy along at $9, and if it goes up, which is bad for me, I still make money because I've really technically bought it at 7 and sold it or bought it at 8 and sold it at 9. So basically, what it's for is people who are participating in the market itself. That's what the futures market is for. And what they did in 1934 is they basically said, we will allow speculators, but those speculators have to be registered by the federal government, the Commodity Futures Trading Commission, and they have to have a commodity pool operator or a commodity trade advisor, and they have to register, and they have a limit on how much they can buy or sell, especially in a specific day. So that's basically how the system was. Then they took the system and they broke it, and they purposely broke it. It was first broken in the law, which is the Commodities Modernization Act of 2000, which was lobbied in by Enron, who were a bunch of crooks. The president of Enron is dead, and the CEO of Enron is dead, and the president's in jail right now, and so is the chief financial officer. They basically believed in creating markets, manipulating them, making money, and then when they had losses, they would put them off in a side partnership, and they would persuade people to buy the debt or buy the liabilities, why anybody would do that, in return for doubling their money. So they were crooks, and they were caught and they were put in jail, but not before they had cornered the electricity market in California and caused Californians, caused brownouts, caused hospitals to basically let patients die, and all these other horrible things. And they conspired with the people that provided electricity in that market. So that's basically who they were. And once they got this law passed, they didn't get a chance to exploit it, thank God, because they were charged and they ended up in jail. So they couldn't, and their company collapsed. So, however, that didn't mean that there weren't others waiting in the wings to exploit the laws that were created. Now, the ostensible reason for this Commodities Modernization Act was to have America participate in and be dominant in what they called new markets. And new markets are derivatives. They're like the subprime market that just almost destroyed our financial systems, causing the recession of today. Commodity-linked structures, which will probably cause the recession of tomorrow, and other, basically financial instruments that are so obscure, they're so hard to understand that even the people who are playing in them don't know what they are or what they mean. They only know that they are going up or they're not. Then there's index funds. And basically index funds started against like the Dow 30 or the NASDAQ or the S&P 500. And that was fine. It's basically said that if an index goes up a little bit, then we're going to trade stocks in such a way so that our fund goes up the same amount or down the same amount on any particular day. So that basically when you participate in an index fund, you're participating in the activity in that entire market or stock market or fund or whatever. So that's basically what that is. Now, when they went to commodities, index funds for commodities, those were basically illegal until 2000. And then they were against regulation until 2003. And what they did is in August of 2003, the CFTC, forced by the Bush administration and the Republican Congress, were forced to incorporate the Commodities Modernization Act of 2000 into the regulations. And they did. And basically it said that anybody who's a dealer would be completely unregulated. Anybody who is a hedge fund and whose investors are sophisticated persons, completely unregulated. They didn't have to report. They didn't have margin requirements. They could buy as many futures as they wanted, and they could sell whatever investment vehicle they put together to the general public. So that created the index fund market, and it also allowed these other bizarre derivatives issuers, who are mostly hedge funds, to issue derivatives based on the value of commodity pools that were no longer regulated. And I even found articles and basically ads from hedge funds that said, fill out this form so that you can no longer have to report your activities to the CFTC. Now, it took a few years for that to sink into the market and to cause the market to start going crazy. The agricultural and commodities market. And basically, in late 2006, all of a sudden, the price of natural gas went up more than 100%, came down the same amount 2 months later, and then started shooting back up. The CFTC, the FBI, who knows who else, started looking into it, and they found that there was a one-player play by a hedge fund called Amaranth that was run by a guy from Canada who claimed that he wasn't under American law and couldn't be indicted, and that he could manipulate the market and corner it and make a lot of money. Now, he had made a mistake. He got investigated because he stayed in too long, the second manipulation. He made a fortune when he forced the price up. He made a fortune when he forced the price down. But then he forced the price up again, stayed too long, lost $6 billion in 1 week. And then he got investigated. Oh, gee, let's investigate him while they're doing the manipulation, not while the market collapses around them and they lose their shirt. And then their investors start screaming. And again, the banks, he had everything that he had done was on complete leverage. So basically, a bunch of banks lost a fortune giving him loans so that he could manipulate this market. So that was really a kind of an awful thing. So that happened late 2006, the whole second half of 2006. This particular market, where the prices of everything just started skyrocketing, all the agriculturals, all the grains, basically, and all the energies, basically the things that are required for a society, both a third world or a first world society, to survive. How are you going to run China when the price of rice has tripled and your people are starving? They can't afford rice, which is what they eat. Same thing with the Philippines, same thing with Vietnam, same thing with India, also dependent on rice. So basically we have these new players in these markets, and they are investing long-term. They're investing long, and they have an incentive to have the price go up. What's the incentive? Because really, a trader can make money if the price goes up, goes down. Usually volatility is their friend. Why is it just going up and then up farther and then up some more? Well, the reason is because of the nature of the hedge fund, and also the nature of these bizarre derivatives, the same derivatives that caused the foreclosure crisis that people are suffering about today. Basically, these derivatives, they're called commodity-linked discount bonds, and then there's derivatives that are based on the value of the discount bonds or the cash flow of the discount bonds, and if the value goes up of the underlying asset, whatever it is, everybody thinks that this is a good thing to buy. In fact, these particular derivatives, people who are buying them don't own the asset themselves. They don't own the oil. They don't own the oil future. All they own is a claim on the cash flow that comes from it. So in order to convince people to buy it, you have to have a cash flow and you have to have an increasing price. So basically there is an incentive for the people issuing these really fiendish frauds, and I'm not going to put it any better than that. They're issued out of the ICE, which is the Intercontinental Exchange, which is really in Atlanta, but it's under English law. They're issued by the CBOT, which is the Chicago Board of Trade. They are completely unregulated, and there's a law that says that they can't be regulated, a law that may or may not, and I'm still researching it, have been reversed in the last agriculture bill. So that's basically how it is. And basically what these are, as long as the price of the asset, as long as the price of oil is going up, and it goes up again the following week, and it goes up again the week after, these derivatives go up and up and up exponentially, and banks and retirement funds and things like that buy them. The minute that there's a break in the price of the underlying asset, those derivatives are worthless. That is exactly what happened with the mortgage derivatives, the mortgage-based derivatives. The minute the default rate went up beyond what the calculation was, they became completely, absolutely, totally worthless. And that caused a credit crisis because banks had bought them and were being forced to show them as losses, and they were not able to loan money as much money as they were before because of leverage ratios and things like that. So basically right now we have the situation where these derivatives that are based on the price of oil, they're based on commodity pools of oil in markets that are unregulated, are being forced up in order to keep these derivative markets afloat. Nobody knows how much money are in these derivative markets. There's credit swaps, but there's also these discount bonds, and there's also these commodity-linked structures, they're called. Very, very dangerous things. Warren Buffett called them instruments of financial mass destruction, which is what they are. So there is one of the senators, who's Senator Lieberman, who's a Democrat that became an independent and so on and so forth. He has actually put a bill together basically to ban derivatives and to ban hedge funds and index funds from investing in commodities at all. That is the risk that whoever is manipulating this market is taking, that they can be put out of business. Meanwhile, the CFTC, which was completely defanged and almost taken out as an agency, was by the agriculture bill, was given the power to basically require information from all the players in the commodities markets, both the energies and the agricultures. They came out with a new set of regulations about a month or two ago, and they also announced that they were investigating market manipulators. Now, this was a signal to the people that are manipulating the oil market that you better stop, or the FBI is going to be showing up at your door. The FBI has actually arrested two major hedge fund managers for Bear Stearns, who manipulated and who lied during the subprime market derivative meltdown. And they arrested another, I think, 400 mortgage brokers who cheated, and so on and so forth. So there's an investigation going on. They usually don't announce it unless they're about to come up with indictments, but they were trying to tell these people, knock it off, or you're going to start getting in trouble. Interestingly enough, the CFTC just posted on June 28th a little page and a half memo that said that, and of course the CEA has always had that the CFTC has emergency authority to basically shut down a market, take it over, and pull players who are manipulating the market out of the market and stop them, seize their contracts when they're being manipulated. So basically what these issuers of these derivatives are doing is they're going to this Intercontinental Exchange, which is in Atlanta, but is registered in London. And they're going in there and they're buying, they're separating themselves out into two different entities. They're selling themselves oil at $120, then buying it at $122, taking the same contract, buying it at $124, and then buying it on the NYMEX at $126, $128, $130, and so on and so forth. There are certain days, and I can actually tell you what those days are, where the volume went up far beyond the amount of oil that was for sale, which meant the same oil contracts were trading hands back and forth over and over and over again. Can only be done, they have what they call a wash trade or a sweetheart trade. And that means that I am just trading it to myself in order to force the price up. And there's a reason to do that, which is to maintain and increase the value of commodity-linked derivatives, something that needs to be banned. So I support the Lieberman Amendment, although I don't think that it will get that far. My name is Reed Silver, and the name of the show is Fed Pride. Reason it's called Fed Pride is because I'm a federal worker, proud of it.